All right, guys. Well, for those of you who don't know me, my name is Lindsay Duff. I am the owner of Responsible Day Trading. I'm a co-owner of UProfit Trader. And now we have Responsible Day Trading Tax Pros, which Jay is the tax pro. I'm not going to lie to you. It's not me, but Jay is the tax pro. So what we're going to do here today, guys, is we're really just going to be giving some information. None of this is, you want to make sure that this is just an informational option for you. At the end or later on, you can go to the site, and you can go now if you want at any point in time to responsibledaytradingtaxpros.com. You can set up a 20-minute consultation with Jay here, and you will be able to find out more specifics about what you need. So this is not advice. This is just informational and learning. I've got more and more people coming in, so I'm just letting them in as they can. But let me tell you a little bit about me. If you don't know, I have been involved with day trading for about 16 years now. I have worked for several companies, education companies, before I created Responsible Day Trading. And one of the things that I know about trading is one of the biggest questions we get is, what do I do with my taxes? And really, guys, at that time, all I could say to people was, well, ask your tax person. And, honestly, that's just not great advice. Being able to say, hey, here's what you can do. Here's some options. This is what you need to know, because a lot of times those tax people do not have the information that you need in order to reap all the benefits that we're going to talk about today. Now, this is my friend Jay. Jay is the tax pro. Okay. So Jay got involved. How long have you been in trading?
5 years.
5 years trading. Okay. And one of the reasons he got involved with the tax pros was the same issue that most of us have, is he had no idea what to do with his taxes. So he said, okay, well, I'm not only going to figure it out, I'm going to make a solution for other people as well. And that's where we are today. So you want to tell them a little bit more about you, Jay?
Yeah. So I started trading in Forex, and I did a lot of things that most people do. And that is, you go online, you start looking up some YouTube videos, you start trying stuff, but nowhere is anyone warning you about the tax ramifications, right? And so I get to the end of the year, I use TurboTax, and I realize I could have been in a much better situation. And I've since found out that taxes for Forex are totally different than stocks and options, just like taxes on futures are totally different. So I'm like, this is crazy. And I can tell you that just this year alone, I have taken hundreds of calls from people who started trading during the pandemic, and they didn't do any research. And many of them found themselves in huge trouble. So when it happened to me, I contacted a group of accountants who focus just on day trading. And I decided, you know what, I want to be a part of this. And so we put together an entity that they've been dealing with day traders for 10 years. They've been doing taxes for 35 years, but day trading taxes is still a fairly new beast, right? And so I decided I want to be a part of this, because this is ridiculous. There are so many things, Lindsay. I'll just give you an example. Wash sales. People don't know about wash sales. They don't know what they are, how they work.
I found out the hard way personally about wash sales, because I'm not familiar with stocks.
Right.
Well, I'm learning about stocks now, and I'm trading stocks now, and I got hit with the wash sale rule.
Yeah.
That was fun.
And it really frustrates me that a brokerage is not required, the minute that you trigger a wash sale, to send you a notice that says, hey, you just triggered a wash sale and you need to get some tax advice, because otherwise you could really be in trouble at the end of the year. Mm-hmm. The crazy thing is that once you know how wash sales work, there's no worries. You can handle it. All you need is a little bit of education. Yeah. So I got so frustrated, and I'm obviously passionate about it, because a little bit of education goes a long way. So that's why I'm excited to be here today. I love to share this information. And as you said, it's not individual legal advice. That's not what we're giving today. We would have to see all of your situation to be able to do that. So today is general advice. We'll take general questions. And then if you want to set up a free 20-minute consultation and get more specific, you can go to responsible day trading. I can't say it.
It's a long name.
Lindsay.
Responsible Day Trading Tax Pros.
There you go. Say that.
I'll put it in there.
Fast. Yeah. So she'll put it in the link. So that's the long and the short. The other side of me is I've been a talk radio show host for 20 years. I was on the air in Dallas for 5 years. I was on the air here in Utah for 10 years and in Vegas for 5 years. So that's the other. That's the other side.
You also run for Congress too.
I did run for Congress in the 4th district in Utah last year. I lost in the primary, but yeah.
Hey, you know, it takes guts to go and do something like that.
It certainly took a lot of guts and it took all my money. So we're rebuilding now.
There you go.
Yeah. Yep.
Well, we've got a pretty good amount of people in here. We're about 6 minutes in, so we can probably, because I know it's a lot of information that we're going to cover.
Yeah.
And at the end, guys, I mean, if you have questions that come up during, you can definitely type them in and ask them. I'll read them out loud so everybody can hear them. This is being recorded. So if you have to leave or anything like that, we'll be putting this out a little bit later. Okay.
Great.
All right.
So I think what we should do, Lindsay, is just kind of start from the beginning and pretend like, because I'm sure there's varied tax knowledge out there.
Correct.
Let's just pretend like
well,
we're
and
starting
everybody
fresh.
here is at different levels. We have stocks, Forex, futures.
Yeah.
So this is not just a one size fits all. You'll be able to, whatever you're working with, you'll be able to specifically come in and work with that and figure it out. So it's not just about day trading per se, but definitely, trader tax awareness for sure.
Yeah. So maybe we should start from the beginning. Right now, if you haven't done any tax planning, right now the IRS looks at you as an investor. So even if you day trade 10 hours a day, they still look at you as an investor. And as an investor, you've got some problems that you really want to overcome depending on what type of investor you are. So I'll share with you, there's 4 problems that you have when you're considered an investor instead of a day trading business, okay? The first problem is that you're under capital gains instead of ordinary income, right? So depending on where you're at in your tax bracket, that can be a problem. Second problem is you're subject to the wash sale rule. So a wash sale, for those of you who don't know, is when you sell a stock or a security for a loss and you buy it back within 30 days. That loss is disallowed by the IRS until you get out of that security for at least 30 days. And if you keep buying and reselling and buying and reselling, that loss continues to carry forward. And if you carry that loss through the next tax year, you could have a whole year of losses disqualified. So you may think that your realized gain was $10,000 and the IRS thinks it's $80,000 because they disallowed all those wash sales, right? So that's problem number 2, the wash sales. Problem number 3 is you can't deduct more than $3,000 a year in net losses. So let's say you had a bad trading year and you lost $50,000. The IRS as an investor says, no, you can only take $3,000 of that against your income. And then you carry over the $3,000 each year for the rest of time until you reach that $50,000, right?
Wow.
And problem number 4 is you can't take any business deductions. So you can't deduct your phone, your internet, your home office, any money that you're paying for courses, online courses, for indicators, for computer equipment. You can't deduct any of those. So those are your 4 problems as an investor. So I'll go through them again. Capital gains tax, wash sale rule, net loss deduction of $3,000 max, and business deductions. Okay. So is that pretty clear? I think everybody should be clear. Those are the 4.
So far?
Yeah. Those are the options right now. Okay. Those are the obstacles. Yes. Okay. We are clear. Okay. So there's 2 paths that you can take to overcome those four obstacles. One is as a sole proprietor. The other is as a business, an LLC or a corporation. And they both have their kind of pluses and minuses. And please keep in mind as we talk about this, some of the things that I'm going to talk about are different based upon the type of trading that you do. So I'm talking in general terms right now. Near the end, I'll share with you how this varies if you're a futures or a Forex trader. Okay, because I want to clarify that. And that's one of the reasons why you need a consultation, by the way, because there is no set path for everybody, especially if you're in multiple markets. Then you've got some thinking to do about your tax strategy, right?
Yeah, because I'm like future stocks and crypto these days. Aren't we all crypto traders these days?
Right. So your strategy is going to be different. And that's why you need an individual tax consultation. But in general terms, let's talk about the first path. As a sole proprietor, if you want those business deductions, then you're going to want to try to qualify for something called trader tax status, or TTS. And if you want to do research on tax laws, that's a great phrase to start with. Trader tax status. How do you qualify for trader tax status? Trader tax status is proving to the IRS that you're a business. And so the IRS says, okay, you're a business, you can take business deductions, right? But here's the crazy thing, Lindsay. The IRS doesn't know what qualifies you for Trader Tax Pros. In fact, the only reason for trader tax status, the only reason we know is because of court cases.
Yes.
That's it. That's the only guidelines that we have on trader tax status. Basic guidelines. 720 plus trades a year, okay? 4 hours a day of trading, daily trading, and frequent trading. So not 3 days on, 5 days off, 3 weeks on, 3 weeks off, right? Basically, they want to know that you're running a business. So if you're running a day trading business, you're going to be working regular day trading hours, right? They want to be able to see that. If they see that, then they'll grant you, in their kindness, trader tax status. Now, the only thing that trader tax status gives you is business deductions. People think it gives you other things and it affects the wash sale rules and other things. It does not, okay? So be very clear. Trader tax status only gives you business deductions.
But that's like the deductions you were just talking about, like your education, your home, like your home office, all that kind of stuff. Yeah. Okay.
Yeah. And it can add up, right? It can absolutely add up. And if you are operating as a business, why not take those business deductions, right? Here's the other problem though with trader tax status. You don't know if you qualify until after you've filed. So you can't really know. There's no way to know going in advance. And the IRS could say, no, we're not going to accept these deductions because we don't think you qualify. One of the keys about trader tax status is you can qualify at the end of the year when you file. You don't have to make any elections in advance. You just file. You need an accountant who understands trader tax status. So that's another key tip that I'll give you if you're searching for a CPA or you have a CPA and you want to use them. Ask them a simple question. Do you understand trader tax status? If they go, oh, let me look on the internet, you're in trouble. Okay.
Well, and that's what we were saying, you and I were talking about this before, is whenever that happens, you're going to end up even paying more because now you're going to pay your tax person to go find a professional to get the information they need and then come back and hopefully they do it right.
Yeah. Right? And let me tell you, even for a CPA, it is so hard to go and get clarity about these rules. We have studied them. We have watched the cases. We're just watching this all the time because it is an evolving world. Day trading is something the IRS is very interested in now because before they weren't that concerned, but with the invent of all of these new trading apps and the ease of use, suddenly everybody's trying this out. And so the IRS, I think you're going to see some changes here.
Well, nobody wants to go in the office anymore and
that's right.
Live somebody else's dream.
That's right. That's exactly right. Okay. So back to the individual path. Trader tax status only overcomes one obstacle. that we talked about of the four, and that's business deductions. Okay. It gets confused, Lindsay, with something else, and that's called a mark-to-market election. This is the second phrase. If you want to research or ask your accountant, do they understand a mark-to-market election? Or it's called a 475, Section 475 election, okay? It's mark-to-market that will affect your capital gains, your wash sale rule, and your $3,000 limitation on losses, not trader tax status. People get them confused all the time. They are completely different, okay? So remember, business deductions come from trader tax status. The other three come from this mysterious thing called a mark-to-market election. Now, if you are an individual and you want the mark-to-market election, unlike trader tax status, you have to apply for it prior to the tax year. Trader tax status, you can qualify at the end of the tax year. Mark-to-market, if you wanted it in 2021, you would have had to file for mark-to-market on the tax deadline this year. So what was that? May 17th, right? It got extended.
Yeah, they moved it to May.
And in Texas, you guys actually got an extra month because of the storms, right?
I think so. Yes.
Yeah. So you even got an extra month compared to everybody else.
Mm-hmm.
So if you wanted mark-to-market for 2021, you would have had to select that at the beginning of the year. So anybody who's listening who doesn't have it and you want to go this sole proprietor route, the soonest you're going to get it is for 2022. And you need to make that election when you file your taxes at the beginning of next year for 2021.
So two important things, right? Trader tax status and mark-to-market.
Yes, election.
You need elections. You need to make sure that your tax person understands those, because there's no problem with using your own tax person, obviously, but you just want to make sure that they're going to get you everything you need. And if they understand those, then cool. It's perfect.
Yeah. My bet is they're going to look at you cross-eyed. They're going to go, what? What is this? Okay. Yeah. So if you have if you have mark-to-market election, what happens, Lindsay, is the IRS considers everything you do as cash. So in essence, you start the year at zero, and at the end of the year, they tax your account based upon the idea, what if you sold out of everything? What would your profit and loss be? And you'll be taxed on whatever it would be if you zeroed everything out. Now, that can be a bad thing because normally you're only taxed once you sell that security, right? Mm-hmm. But at the end of the year with mark-to-market, you're going to get taxed if you've had a gain. So people are like, well, why would I want to do that? Well, the reason you want to do that is because it can affect your capital gains. But the big one is it gets rid of the wash sale rule. Wash sale rules go away for anybody with mark-to-market. And so
would that just be mostly for someone who's trading stocks? Because does the wash sale rule apply to anything else besides stocks?
Wash sale rule is stocks and options generally.
Okay.
It does not affect futures or Forex or crypto.
Right.
Okay. So, and as we'll talk about a little bit later, mark-to-market is not something that you want if you're futures or Forex.
Right.
It is something you want if you're stocks and options. Okay. But you have to weigh that out. Do I want to be taxed at the end of the year on unrealized gains? Right. Because that's what's going to happen. So you have to decide, is the wash sale rule more important to you or not? I'll give you a hint about wash sale rules. You can eliminate any concern with wash sale rules by just getting out of your wash sales by December. And don't get back into them for 30 days.
There you go. Okay. Devon says, what if you do both? So what if you're doing stocks and futures?
Yeah. So that's a question that is difficult to answer here. It will depend upon your percentages. Okay. If you're mostly stocks, then you might want mark-to-market. And I guess I'll tell you right now, futures and Forex are something that can be taxed as what's called a 1256 contract. And what they have is a blended tax rate. So normally capital gains, if people don't know, there's a long-term capital gains and a short-term capital gains. The higher rate, long-term capital gains maxes out at 37%. The short term, I'm sorry, flip that, reverse it. Long term is a max of 20%. That's anything that you buy and hold for a year, capital gains at 20%. Short term, what you buy and sell within a year, is taxed at the short term rate of up to 37%, depending on the total amount, right? So that's a huge difference, long term versus short term.
Mm-hmm.
If you're a futures trader, you get what's called a blended rate. And this is the other thing. So futures traders, talk to your accountants about 1256 contract and a blended rate. What the IRS does is they say, instead of you being long-term or short-term, we're going to give you a 60-40 split of the two. So 60% will be at the long-term, 40% will be at the short-term, regardless of how long you stay in. So if you're a futures trader and you were looking at a 37% capital gains rate, if you do that 1256 contract, that cranks you all the way down to 27%. You're talking about a 10% savings on your tax bill if you know that futures and Forex are traded differently, right? So that's why, and by the way, electing mark to market, you can't have mark to market and the blended tax rate. You have to choose one or the other. So if you're 70% stock and 30% futures, you might say the wash sale rule and the $3,000 limitation is more important than the blended rate for me. But if you're 70% futures and 30% stock, you're going to take the blended rate and you're just going to try and manage your wash sales. And if you have a loss of more than $3,000 a year, you're just going to eat it, right? Well, not eat it. You'll pass it on from year to year. Yeah. So that's where you really need some specific advice, right? But so that's the bottom line. If you want to get rid of those 4 obstacles as a sole proprietor, the first thing is to qualify for trader tax status. You can qualify for that at the end of the year. That gives you business deductions. But if you want the mark-to-market election, which affects your capital gains, the wash sale rule, and the $3,000 loss deduction, you have to do that mark-to-market, and you have to do that at the beginning of the tax year. Okay.
Okay.
So this is, I hope we're bouncing around a little bit, and these are complicated issues. So hopefully,
is everybody feeling pretty clear so far? Are there any more questions?
Hopefully we're keeping it all straight.
I am totally confused. I heard 1256, and then I heard market tomorrow. I'm familiar with the taxer. Was it trader tax status? I'm familiar with that. But when you were talking about the split, the 70-30, I kind of just got everything else got jumbled in my head. The 1256 sounded like it was beneficial, though, right?
Yes. Are you? What type of trading do you do?
Primarily Forex, but soon to be some options and futures.
Okay, so primarily Forex, you don't need to worry about mark to market. And futures, you don't need to worry about mark to market. So you can maybe scratch those off your list short term. Okay. When you get into stocks, the mark to market will affect the wash sale rule, and it will affect how much in losses you can take every year. But the main thing that you need to know is that Forex and futures have a different capital gains rate. It's a blended rate, 60-40 rate, short-term, long-term. And so whoever you work with your taxes, make sure that they know that, because if they don't, you're probably going to pay 10% more than you have to on Forex and futures.
So when you say 60-40, you mean you're paying 60% on short-term gains and 40% on long-term? Is that how?
Yeah,
what?
It's a 60-40. Yeah.
Jeez Louise.
It's actually, but they don't look at, they just do a 60-40 on the whole amount. It's really weird. So they're not actually looking. So normally with stocks, they're looking at your long-term and your short-term. With futures, they take whatever your gain is, and they say, we're going to tax 60% of that at this rate and 40% at this rate, short-term and long-term. And that's going to be your total tax burden, whether or not you hold it for a full year or not. Futures and Forex, is different.
And the rate varies by your total income, or?
Yes, by the total amount of the capital gain. Okay. So it's up to 37% is the highest the highest that you'll pay.
Okay, gotcha. Thank you.
Yeah, hopefully we can keep this straight. You know, I think for a lot of you, the main thing is to understand that there are significant differences based upon your trading style. You need to make sure your accountant understands these things. And then if you don't have an accountant that understands these things, we'll do a free 20-minute consultation and try and help you understand them better.
Perfect.
So that is the sole proprietor route. Okay. So I'll go through it one more time just so people know. Business deductions from trader tax status, and then the mark to market it changes your capital gains. It gets rid of the wash sale rule, and it allows you to take unlimited net losses in a single year. Okay. But mark to market will eliminate the blended rate for futures traders and Forex traders.
Yeah.
So something to think about. Okay. So the next path, and this is the one that most of our traders will go on, is to form an LLC or an S corporation and to start trading under a business entity. Okay. And then once you do that, you can run those business deductions through your LLC or your entity. And then you can make the mark-to-market election for your business. Now, the benefit that comes from that is if you formed a new LLC today, Lindsay, you have 75 days from the formation of your LLC to make the mark-to-market election. So you could, if you formed an LLC today, if the mark-to-market is really important to you, you could form an LLC today and start with mark-to-market today. And so you'd have it for the rest of the year.
Instead
You won't
of
have
having
to
do
wait.
it at the end of the year.
That's right.
Yeah,
You won't have to wait until next year. So the drawbacks with an LLC or an S corporation, unlike operating as a sole proprietor, you have to file a business tax return at the end of every year and a personal tax return. If you're a sole proprietor, you just do it all on your individual tax return. So that's one of the drawbacks. One of the other strange requirements from the IRS is it has to be a multi-member LLC. It can't just be you. You've got to find somebody else to go on that LLC. And I think that's because the IRS they don't want investors just setting up LLCs to avoid tax ramifications, right? So they're trying to make you prove that you're a little bit more legitimate, right? So you have to do that. So LLC and then the mark-to-market election can be a great way to go.
I think we have a question coming in.
Yes.
There you go, Christy.
Oh, hi. I do have a C Corp, and I was wondering, can I file under that umbrella, or is that something that I have to do completely separate?
So what does your C Corp do?
We do construction, interior design, build, and then I want to, and then we, one of the partners is using the umbrella to start a nonprofit. And so I just don't know if that's something that I can kind of throw in there as well.
The answer is yes, you can do it, but our recommendation is that you don't. And the reason for that is, first of all, the mark-to-market, you're saying that your company runs under a completely different accounting structure. So now you've got, right? So that changes. But the other thing is, remember that the IRS is looking for people who are just trying to take their investments and fold them into a business to avoid tax liabilities. So the more you cloud that with other things, the more you put on the appearance that you're just trying to create a tax umbrella, right? So our recommendation would be you form a separate entity, especially if you're going to make a mark-to-market election, and that you run all your trading through that entity. That's going to protect you the most.
Okay. Thank you.
Yeah. Great question.
Thank you. I appreciate it.
Yeah. I will talk a little bit, Lindsay, about something called the self-employment tax.
Okay.
Do people know what the self-employment tax is?
I don't think we talked about that last time.
We didn't last time, and a failure on my part, but this is important, okay? Self-employment tax is your Social Security and your Medicare, right? it comes out of your check automatically if you're an employee. And if you're an employee, your employer pays half and you pay half. So it's about 7.5% each, right? Guess what? If you're a sole proprietor, you pay it all. And that's on top of the capital gains rate. So you pay the 15% if you're a sole proprietor. It's called the self-employment tax, okay? And if you set up an S corporation instead of an LLC, you can affect the self-employment tax. Now, an S corporation is even more complicated. You have to draw a reasonable salary, so you have to put yourself on the payroll. So it's not a good entry-level situation. An LLC is the better entry-level situation. But I'll give you an example. Let's say you made $100,000 in net profits in your S corporation. You're only paying the self-employment tax on the portion that you pay yourself. So if you paid yourself, you made 100,000, you paid yourself 50, then you have to pay the self-employment tax on the 50, but the amount that stays in the S corporation, you don't pay self-employment tax. Whereas if you have an LLC and you make that 100,000, you're paying self-employment on the full 100,000, whether you take it out or not. So that's another consideration to think about. But again, S corp, much more difficult. You have to put yourself on the payroll. So that's a lot more complicated. If you're making north of 50,000 plus a year from trading, I think that could be a good route. Below that, LLC is a good option. And you can also do the S corp later on if you want from that.
You could even talk about doing like an S corp with an LLC and all that. Like, yeah. So there's just a lot of different options there for sure.
Yeah.
And that's why it's important to even, you know, if you have more questions after this, to set up the 20-minute consultation so you can figure out what route is best for you. If the person you're working with is the best for you, you know, those kind of things. Make sure that everything is being touched on.
Yeah. And that will allow me, by the way, I do all the consultations. So you'll be talking to me, but it allows me to ask specific questions about your circumstances. And I still can't be totally specific because we want our CPAs to look at your paperwork before they can give you specific actionable advice, but I can speak more to your individual situation in that case. I think the bottom line, the thing to know today is that you want to get out of investor status and you want to get into business status. And you can do that as a sole proprietor or as an LLC. And then that mark to market on top of that can give you other benefits, but that depends on your type of trading. I'm trying to simplify it as much as I can, Lindsay.
You say it just rolls off your tongue so easy because you're used to it, but
I know
it still makes my head spin a little bit hearing it all. And I've spent some time with it too, but it's a lot of information that no one gives you. I mean, like I said, I've been in the education business for 16 years. And that is one of the main questions people would come to me with. And I'd be like, oh, go talk to your tax person. You know, that's all you could do at that time.
And I can't tell you, this year has been a tough year for a lot of people. Like I said, so many have started trading in the pandemic. They went to their accountant. A lot of them have great CPAs, but just because your CPA can do normal accounting doesn't mean they know trader accounting. They just don't. And it's like, if you're a real estate agent, if you're in agriculture, if you're in some of these specific categories, you want an accountant who knows all of the ins and outs of that structure. If you don't, you're going to leave money on the table or you're going to find yourself in trouble. So,
yeah. Oh. All right. So Devon says, when setting up your LLC, is there a certain category we should state as the business? Follow up similar questions when opening your bank account?
No, the LLC is mostly going to be set up on the state side. You're going to get a federal EIN number that you're going to use. The category is not critical to how the IRS views you. You can be pretty generic if you do business services or, things like investment, things like that. Your bank account, you'll use your EIN number and your fictitious name, whatever you use on your LLC. And then once you have your bank account, you're going to want to make sure that you run your brokerage accounts as your business, because we talk about those court
I
cases.
had that happen when I first started. I didn't realize that. And I set up everything up under my name and not under my business name. So I had to pull, I had to pull everything out of my account and put it back in there instead of the business account. Yeah.
Yeah. And that can be a painful process. You're not taxed on any money that you move into your LLC, but, and it may be something you do over time, but there's one court case that just went before the courts recently where the guy was trying to get trader tax status, but he kept all of his accounts personal. He didn't move them into his business. And the court said, sorry.
Yeah.
Sorry. You know, because again, the main thing to think in your mind is, what am I going to do to prove to the IRS that I'm not just an investor trying to avoid tax liability? And so get a business account, set things up as legally and as clearly as possible. Avoid any ambiguity if you can.
So Vivian says, do you recommend sources for accountants? Are you saying recommending sources for accountants to use for information, or do we have accountants we recommend? Because if you do, you can use the Responsible Day Trading Tax Pros, and you can go to them. And like I said, you can do the 20-minute consultation with Jay.
I'm biased, Lindsay. I recommend us.
Yes. That's what I'm saying. I would recommend us, I actually don't know any other trader, tax guys. So these are the guys I recommend, and they come and they've got great resources or great, what's the word I'm searching for? Referrals. Yes, that's the word I'm searching for. So yeah. And hopefully, Devon, that got your first question answered. Your next one is, what category do you give the bank? Some seem to be sensitive when trading is mentioned. That's very true. I had that happen too.
Really?
Yeah. At Bank of America, they were a little sensitive at first.
I haven't faced that. And because we don't actually set up the bank account, like the services we provide, we'll create, a qualifying LLC or an S Corp for you if you want us to do that. We don't just give tax advice and do tax returns. From beginning to end, we'll set up a qualifying entity. But when we do that, we hand the entity to you, and then you go and set up the business accounts. So I don't know if anyone else on here has any feedback about that. What did you finally do, Lindsay? What did you tell the bank, or did you just told them?
I don't remember. It was so long ago.
Yeah.
I honestly don't remember. But I started creating a lot of other businesses around trading. So they just stopped asking me, because then I had Responsible Day Trading and You Profit Trader and all that. So, so they were just like, oh, you're here to set up another account. I'm like, yeah, let's do it.
Yeah. I will tell you, if you're concerned about any of that, just keep it, as simple as possible. Business, financial services, or, as simple as you can do will be helpful, I think.
And Vivian, you're sitting with Trader Tax Experience. Okay, yeah, here I'm putting in the link so you can. And there are different levels that you can sign up for. If you want to just go to the free consultation and get more information, you can do that too. But there are different levels of tax help that you can sign up for that they'll discuss with you. That will let you know what you need. So
we have a great package that most of our traders go with. We'll set up the trading entity completely qualified. We'll make the mark-to-market election for you, so you don't have to worry about that. And we'll do your first year taxes. That's the most common package that we sell. And then we'll do your business taxes each year after that. But I'll tell you, when you call me, it's not a sales call. I will give you as much education as I can. And then hopefully it will empower you to be able to find out if your current CPA can handle this, or if you need somebody else. I'll tell you, there's only that I'm aware of. I think there's only 3 of us in the country that actually focus on day trading.
Just day trading. Maybe that's why I haven't found any other guys.
Yeah. So there's not a lot out there. And as I said, day trading is so new to the IRS because it's now so prevalent, and crypto is changing that as well. So we're watching crypto laws pretty aggressively to find out, what are they going to do? What is the IRS going to do about crypto?
Yeah, because it's so new and everything.
Yeah.
All these people are,
Yeah.
oh, I'm going to be getting away with everything with it.
Yes.
No, they're going to come in and
they'll find you.
Take their part.
Find you. Yeah. Do your part in advance. I mean, we're not going to give you any strategies to get over on the IRS. Our goal is you pay them every dollar that you owe them, but you don't pay them 1 penny more, right?
Right.
1 penny more. And we find that futures and Forex traders often are paying the IRS too much money. So get some good education and set yourself up for success. It's kind of sad because a lot of people across the country teach their clients how to trade successfully, but they don't teach them how to keep that money.
Yeah. Well, I mean, I have to admit, I was part of that. I was part of that for a little bit. And I'm really grateful that we've come together to do this too, because like I said, we have we should be teaching that type of things to people, and we should at least give them resources to be able to figure it out. And to know that, hey, if you do sign up for education, like with responsible day trading or something like that, then, how are you going to be able to write this off? Because in the past, we're just like, you're kind of stuck with that payment.
Yeah.
Right. Yeah. But now you can get, you can take that. And I actually never, before I met you, didn't even know that was a possibility to have education written off for people.
Well,
and even like the funded, like if you went to YouProfit Trader and got funded, your subscription for that, you could use also. So,
yeah. And we have, unfortunately, there's a lot of coaching companies out there that are telling their clients that the education is tax deductible, but they're not telling them how to make that happen. And so they'll get to the end of the year and they go to deduct that education and the IRS slaps their hand.
Yeah.
So that's why I'm so glad to be part of this. And I love what you're doing, Lindsay, providing this education piece. If we accomplish anything today, and that is just for people to say, man, I got to get an education about this or find somebody who knows, then we've saved people a lot of trouble. There's a story going around the internet that probably generates 10 calls a week for me. And that's the story of a guy who ended up with I think he
know
thought
what you're going to say, like
$187,000
in the hole or something like that. Yeah.
Mm-hmm. Yeah.
Because a kid almost too, I think.
Yeah. Because of the wash sale rule. And people call me up panicked all the time. And once they understand that wash sale rule, how it works, it's pretty easy to avoid those problems, even without the mark-to-market election. But if you don't know how it works, you could take all those losses from this year and think you're going to be able to take advantage of those losses next year. And because you continue to purchase that wash sale, you push it into next year. You get the loss eventually.
When I noticed right away, because when I did it, it put me in at a price that particular market had not even reached yet. So I was like, what in the world? I was on the phone with them, like, what are you doing? And then he explained the wash sale to me, the rule. And I went, oh, I was like, well, there's nothing I can do about that. That was me being uneducated and going in and making these decisions. Luckily, it went up enough where I could get out before it dropped again.
And maybe I can explain that a little bit better for people, just so they can understand how to protect themselves from wash sales. What happened, Lindsay, is the IRS noticed that in December of each year, investors were selling off stocks for a loss to get the tax benefit of that loss.
Breaks, But
then they were buying the stock back on January 1st, right?
Gotcha.
And so the IRS was like, we are not going to allow this to happen. We want that money, right? So they created the wash sale rule. So what happens is if you sell a stock for a loss or option, and then you buy it back within 30 days, the IRS says, no, you can't have that loss. And so if you, at the end of the year, if you have a bunch of losses that are tied up in wash sales, let's say that you think that you made $100,000 in profit, but you had $90,000 in losses. So your taxable gain is $10,000. That's the way most people will look at it, right? But the IRS says, no, of that $90,000, you had $20,000 in wash sale losses. And so now your taxable income is $30,000.
Wow.
Even though your realized gain was only $10,000. right?
Such a huge difference.
Right. So but the next year, or when you finally get out of that wash sale, you will be able to take advantage of that loss eventually. It doesn't go away. It just stays hidden in there and keeps getting added to the cost basis. And so if you're in and out, let's say you're in and out of a wash sale 10 times over the year, that loss just keeps moving forward and keeps moving forward until you get out of it for at least 30 days. So a key that I tell people is if you don't have mark to market, but you will want to avoid the wash sale, go through your statement at the end of the year in December, find anything that has wash sales attached to it, and get out of it by December 31st. And do not get back into it for at least 30 days.
Until like February, basically.
That's right.
Yeah.
That's right. That will eliminate the wash sale rule for you. And with that, you may not even need mark to market, right? So that's a way. And there are people who won't get out of all their wash sales. They'll just strategically get out of enough to kind of balance out their tax liability. So you don't have to get out of all of them. You can be strategic about it, right?
Yeah, you got to be smart about it. You got to know what to do. I mean, because, most people don't know what to do about it, right?
Yeah, I've taken so many calls this year from people who said, I thought my taxable income was going to be 10 grand, but the IRS is telling me it's 40 grand. And they're saying it's because of wash sales.
Such a huge difference.
I'm like, well, next year, if you get out of those wash sales, you'll be able to take advantage of those losses.
Yeah.
And they're like, what can I do retroactively? And that's the question I hate the worst.
Because there's nothing you can really do
No,
to go back and fix
no,
that. Yeah.
No.
You're just kind of stuck with it.
Yeah.
You could win the lottery and then get taxed on that.
Richard says,
it's wash. Richard's asking,
wash.
Yeah, WASH, wash.
Is
sale.
that do I have an accent or my bad English? Yeah, it's wash.
Yeah.
Wash. Yeah. And you often on your brokerage, the only way you know about it is you'll see a little W next to it on your statement.
Yeah.
And they don't explain it. They don't warn you. They don't say anything. And especially a lot of these free apps where you can buy and sell for free now.
Yeah. So I'm using an app called SoFi that for trading my stocks. And the only reason I knew is because when I was like, I was thinking of it just like futures. You just get out, take a little bit of a loss, boom, right back in.
Yeah.
And when I saw that price that it was at, I was like, what is going on here? And I called enraged and I left with my head low, like, okay, I'm sorry. I shouldn't have done that,
Yeah. Well, why can't they send you something when you sign up?
Yeah.
I mean, how hard is that? A quick email
that says, here's some rules you want to be aware of.
Yeah, something,
Yeah.
Or at least when you trigger that first one.
Yeah.
Something that's what frustrates me more than anything.
Yeah.
Is that there's no reason, because if you don't get noticed, man, I talked to a guy earlier this year and he's done. He's never going to trade again. He doesn't know how he's going to pay his tax liabilities. And he would never have done this if he would have known that was
just a little more education.
Yeah.
Well, I do find, after being in this business for so long, a lot of people are just so, their mind's so ready on, I want to make money, that they just jump right in when they're really not ready. Like on all levels, like they're not ready. They're not ready mentally. They're not ready really understanding fully what the market has to give them, but they just see it and they see dollar signs. And what they don't realize is that those dollar signs are going right in the toilet.
Well, and that's the other thing that's so amazing that I love about day trading is where else can you practice in a real world environment?
True.
Right.
True.
And so anybody who dives in, I see it all the time. People have made a couple of trades and they were successful and they're like,
turned off that sim and went live.
Right.
Yeah.
That's right.
Don't do it. Yeah. I beg all my students. Well, I don't beg my students, but I tell my students, I'm like, we're going to wait until you're ready. We're going to go through your trades. We're going to look at all of them. We're going to understand what you're missing before you go live. And even when someone goes live, they still have to understand the emotional part that comes with it, and that they're probably going to lose a little bit in the beginning just because it's their mind is on the money and fear instead of doing the right thing.
Yeah.
And after time, you get used to it because you're like, oh, well, I've lost money before. I'm used to it now. And then you get more comfortable. I mean, it's pretty much a known fact that almost everybody blows out their first account. You know, it's very rare that someone comes in and just boom. But whenever you work with them on the mental side and you give them the education and things like understanding more about taxes, it gives you more confidence to be able to do the right thing. So,
but where else can you go back and reassess your decisions? Like, where else can you do that? With trading, you can say, okay, it worked here. Let me go back and
figure out why.
To see if it would have worked here and would have worked here and would have worked here.
Or that you can simulate the live, or you could go back and simulate even like past data. And that's what I love about Ninja Trader is like, I tell my students, I'm like, you don't have to be in the market when the market's going. You can take a day that you struggled with and you can trade it 15 times over to really learn what it is that you're missing, you know, in a simulated environment. And none of that's going to cost you anything on your taxes. You know?
Just time.
Yeah.
Just time.
Yeah.
And take the time. Take the time to get it right. The good news is I talk to day traders every day who make great money. You know?
Yes.
But they're not gamblers. Right. The ones we're talking about, they're gambling. You know, I'm like, go to Vegas and put it on black.
Yeah.
You know, if you're not going to take the time and you're not going to back test and you're not going to do those things,
you'll
have much more fun.
My best friend loved going to Vegas with me because I was like, oh, once we get down to this level, we're stopping. And she's like, what? No, I just keep, girl. We're up 400. We're going to stop when it gets to 3 and we're going to move on. Okay. She wasn't used to that, but that's my risk to reward management. Honestly, and being in this business, some of the people that do the very best are people who were once professional poker players and things like that, because they think of that risk reward quite a bit.
And they strip that emotion out of it.
Yeah. And I know we're a little bit off topic. Did we have any other points that you wanted to hit that we need to go through? Or do you think we hit everything?
Again, I just want to, I'll just reiterate those points if somebody is joining us later. If you want to know if you have an accountant who can handle your trading, ask them about a couple of terms. The first one is trader tax status. The second is a mark-to-market election. And then if you're a futures or a Forex trader, ask them if they know about 1256 contracts and if they know about the blended tax rate. If you have somebody who can answer those questions, then I would feel confident in using your current CPA. If they can't, then I don't think, as Lindsay pointed out earlier, I don't think you want to pay for their education, and I don't think you want to trust that they get education, they get the right education, because they'll probably be calling me and acting like a client and picking my brain, right?
I've seen people do that before.
Yes. So if your CPA can't answer those questions, we would love to help you out. This is all we do. We only work with day traders. We can set up a qualifying day trading entity for you. We can do your personal taxes. We can do your business taxes. We can do the mark-to-market election for you. We'd love to be there and to help you save as much money as you can. And honestly, that will allow you to focus on the trading and let somebody else focus on the taxes, right? I mean, that's the ideal scenario. Mm-hmm. And I will tell you that just about everyone who works with us, unless they're in dire straits, they get the money back that they use for our services. First of all, because it's tax deductible. Anything you pay to set up your LLC or tax advice is tax deductible. But second of all, just think if you're a futures trader and you didn't know you get a blended rate and we help you get that blended rate, we're paying for our services. That's the other reason I love what I do, is I'm paid to help save people money. And typically they come out way ahead at the end. So I'd love to help you out. If you set up a 20-minute consultation, you just book it according to your schedule. And that's it, I guess.
Yeah. Has anybody got some questions? We are pretty close to the end.
Getting close. Yeah.
But if you've got some more questions, now would be the time. Oh, I see Tabitha is unmuted. You got a question there, Tabitha?
Yes. I just wanted to be clear,
Yeah.
because I understand the forex and the futures when you guys talk about the 60-40, and
Yeah.
I did note it was up to 37%. But what is a 20? What's the connection now to the 20 with the 1256 contract? I'm trying to piece it all together. This has been really great, by the way.
Oh, I appreciate
Thank
it. So
you.
one more time, your question is, what is the connection with the?
Yeah, with the 1256 like I understand the blended tax rate for futures and forex, but you make reference to the 1256 contracts, and I'm like,
Yeah.
I'm trying to put my mind around
Okay.
that.
So the 1256 contract is what is taxed at the blended rate. Does that make sense?
Okay. Okay.
Yeah.
Okay. I got
Okay.
you. That particular contract.
Yes. So
Okay.
if you have an accountant and you trade forex, you want to tell them that you want to file under 1256 for forex.
Got you.
And
Okay. That is
yeah.
that's a tax law.
Yes. Yeah.
Oh,
Yeah.
I got
Yeah.
you. Okay, that's what I was trying to make.
Good. I'm glad you
Love
asked.
seeing the light coming on.
Yes.
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 Okay,
Yes.
yeah. And then the other question, the mark to market, same thing. That's just a type of tax law.
Yeah, it's actually, you're telling the IRS you're going to use a different accounting structure. It's a cash accounting structure. And they say if you're willing to do that, then we'll give you certain tax benefits.
Okay.
Yeah. But remember, you can't have mark to market and the blended rate. You have to choose one or the other.
Okay.
So if you're doing mostly forex and futures, I wouldn't even worry about mark to market, and I wouldn't worry about it even if you're doing 10 or 15% stocks on top of that. I would only worry about it if you were doing 80% stocks and 20% futures. Then you might get some benefit out of mark to market.
I got you. This has been really interesting, especially the wash sale rule you talked about, and I caught what you guys said, to get out of the trades, to exit the trades by the end of the year.
Yeah.
And then that explains to me why the market always dips in January. There's a big sell-off.
Yeah.
But now I understand why everybody's doing it.
Yeah.
Like you to answer another. This is something I heard someone say in a training session probably a year ago. And when you said that, I was like, that's what they were talking about.
Yeah.
With the people dumping in the market.
That's right.
Every January.
Yeah.
Thank you so much. This is very, very educational. I really
I'm
enjoyed
so
it.
glad. I'm
Thank you
so
for
glad.
being here.
Yeah.
We did have a couple of questions come in. So Javier says, for options traders not making 50K a year, do you recommend having an LLC or not?
Yeah, I would go LLC unless you think, if you want to avoid the business tax return, you could do it as a sole proprietor if you think you're going to qualify for trader tax status. If you're convinced you'll qualify for trader tax status, sole proprietor, because you don't have to do that business tax return, it's just easier. But I will tell you, the LLC also gives you some other things. It gives you asset protection. So if a creditor comes after you, you're involved in a lawsuit or something, everything in that LLC is protected. So there's another benefit to that. People use LLCs for estate planning as well. So they add their kids to the LLC. They'll pay their kids out of that LLC so that you can avoid capital gains that way. So there's other tax benefits for an LLC, but side by side, if you're like, I qualify for trader tax status, I'm going to do it that way compared to the LLC. Trader tax status is the easier route. It's simpler. So I hope that helps.
Okay, the next question was from Ray. I might have missed it, but can you compare self-employed versus sole proprietorship?
Self-employed taxes versus sole proprietor, because they're basically the same. You as a sole proprietor or an individual, you have to pay the self-employment tax. So you're going to pay your Medicaid and your Social Security out of that money if you are a sole proprietor. You're also going to pay it on all of your net profits if you're an LLC. The only way to affect it is if you set up an S corporation, and then you're only paying it on the amount that you pay yourself in payroll. So does that answer your question?
That was for you, Ray. I'm not sure if you.
Yeah.
Not sure if you heard that.
I can tell you we've had a couple of people sign up for a consultation already. So that's great.
Okay. All right, good. Well, hopefully they get all the answers that they need. All right, guys. Well, if there's no more questions, anybody have any more questions? I know we're running right at, okay. Ray said yes. Thank you very much.
Okay.
Thank you, Angela. Thank you, Javier. We really appreciate y'all being here. And, you know, I'm just glad that we have something that really can help people. To me, it makes a big difference because this is a world that's so new for so many people, and the IRS don't play around, you know? So we need to know how to be able to come at it in a way that we can, you know, walk away with our head still held high. So
yeah. And keep all your money.
Yes.
Right?
Yeah.
Only, you know, I'm not against paying taxes. I just only want to pay what I owe and not $1 more, you know, that's it.
And guys, I am going to upload this onto the Responsible Day Trading YouTube page, probably within the next couple of days. I am moving tomorrow. So if I can get it up tonight, I will, but if not, then it'll probably be a few days before it's up. So, but that way, anything you might have missed, if you had to leave or come back, or if you, you know, just you need to remember something. That's why I record everything for that reason. When I'm working with my students, we record everything because, you know, we're human. We forget a lot of things.
Well, and again, if you have more specific questions that we couldn't get to, sign up for the free consultation and I'll do my best to answer them there.
Yes. Yes.
Yeah.
All right, guys. Well, I think we're going to wrap that up. Jay, wonderful as always.
Thank you, Lindsay.
And I don't know if Robin's still here. No, I think she already had to leave. So, but thank y'all for coming and joining, and look forward to catching y'all around.
And I'll talk to some of you on the phone soon.
Yeah. All right, guys. Have a great day.
Thank you.
All right. Bye-bye.